This is a video that I wish I didn't have to make just because I feel like it should be so obvious, but it's not, and that's okay. We got to have patience with the comment section. Namaste. All right. So if Magic the Gathering returns on collector booster boxes are 30% year over year, why doesn't Wall Street do it? Nick, you found the greatest investment in the world. It must be either a scam or you just caught on to it before all the really smart people. And once the smart people find out and they validate, they're either going to prove that it's a scam or then suddenly they're all going to do it because it's worth it. It's great. There are so many investment vehicles, investment opportunities that smart people, that Wall Street, that etc. don't invest in. Not because they don't make money, but because they are not convenient. So for example, dividend stocks. People are fascinated with the idea of dividend stocks, where it's like a stock, but the company just pays you money. So to, take a step back, what stocks are a piece of a company. So Coca-Cola is a company. You can buy a stock, you own 1/1 billionth or whatever of the company. If Coca-Cola makes a bunch of money, they own that money, and that's part of the company. And so if they make $1 billion and it's a $2 billion company, your stock, congratulations, went from $1 to $2. It's worth $2 now because Coca-Cola made $1 billion. Now they have that in their bank account, and they can choose to do things with it, like advertise with it or try to invent the next Coca-Cola, or they could try to buy a company with it. But instead, Coca-Cola pays dividends. They give that money to the stockholders. So you have a stock that's worth $2, but instead of that stock being worth $2, Coca-Cola says, we'll just give you $1. Your stock is now worth $1 again. That's super oversimplified, right? But that's how dividends work. People love the idea of dividends because it creates some kind of steady cash flow. And when I say people, I mean Timmies. I mean people like me that aren't super big into finance or whatever. I guess not people like me, but people that are generally financially naive. And perhaps, I could be wrong about this. I did not study finance. I study economics, which are very different. But a lot of big investors, they don't want to deal with dividends because they don't want to deal with taxes. They don't want a steady cash flow. They want equity. They want value in a company that they can then take loans against. That those loans are, liabilities, and you're not taxed on those liabilities. And so this is just the definition or an example of an investment vehicle that, yes, it makes money, but there's an opportunity cost. It's not even clear that dividend stocks would perform better. Like there's a lot of reasons to believe dividends companies like Coca-Cola should take that money and invest it into research and try to beat their competitors. What competitors? Yeah, exactly. I don't know. Anyway, Dr. Pepper apparently is their competitor. The number 2 most successful soda company, Dr. Pepper. Number 3, Pepsi. So what does this have to do with Magic? Okay, well, with Magic, investing in trading cards is such a pain in the butt compared to any other investment vehicle, like any of the Wall Street investment vehicles. Pro investors would take dividend stocks over trading cards any day of the week. But it's not because trading cards don't make money. I mean, there's articles in the Wall Street Journal and New York Times the past year or two about Pokemon cards and how financially viable Pokemon cards are. Boo, Pokemon. But that doesn't mean that Wall Street's investing in them. And it's like, oh, yes, Wall Street is. I have a cousin who owns a hedge fund and they bought, $1 million of whatever set. I don't know, Pokemon. That's cool. That's great. There is just not going to be an interest in trading cards for a variety of reasons. One of them is that it is risky. I think this is the most obvious reason. So one of the reasons I brought up, a less obvious reason, was my first reason, which is just that it's inconvenient. Buying, storing, shipping, selling, liquidity is an issue. People commented on my last video. Liquidity is an issue. You invest $50,000 in Magic cards. You buy $30,000 worth of Strixhaven bundles. Super cool. How are you planning on selling those? Unless the answer is very slowly. I'd love to hear, what your thoughts are. And that's a problem. It is inconvenient. It is difficult. It is not the most liquid thing ever, unless you, yeah, it's just not the most liquid thing ever. Can leave it at that. Another reason is that it's risky. And this is something that I think people don't really think about a lot. And when I say people, I just mean, I don't know, you know who you are in my comment sections and chats and things like that. Some people act as though this return on investment is like guaranteed because it's happened for like 3-4 years. And when I say 3-4 years, I really mean like 24, 25, and 26 had insane returns on collector booster boxes. I should pull up my spreadsheet, but while I'm doing that, I can talk through that there is just so much going on with the prices of collector booster boxes and products recently that it kind of makes you forget what has been happening for the past like decade or whatever, right? So let me share my screen. Man, side note, how annoying is it when you work a job and people ask for permission to share their screen? It's like, just go ahead and share your screen. Anyway, all right, tangent over. Okay, so if you're getting like really good deals on your collector booster boxes this year, you've made like 20, 30, 40% returns instantly on collector booster boxes. From last year, if you bought each of the collector booster boxes equally, you would have 31% return on investment. And that's even with Spider-Man having a negative ROI. 2024, if you bought each of the collector booster boxes, one of each, you would have 47%. Of course, that scales. And this is including fees. This is including shipping. You would still net 47% year over year. 2023, 41%. So, but then you get to 2022, 6%, right? So this isn't just like given. It's not like every Magic product ever has performed at 40, 50, 60%. It's just that the averages of recent years have. Somebody sent me an email. Thank you for sending me emails. Very fun. Someone sent me an email that was essentially like, hey, Nick, what do you think is going to happen with collector booster boxes in the next 10 years? That's a fascinating question. You know why? Because collector booster boxes haven't been around for 10 years. It's like completely unknown what the next 10 years will be like. This is an economics principle. It's also, I'm sure, a finance principle and probably just a science math principle, which is that if you want to predict what's going to happen next, you look at what happened before. So if you want to predict the next 7 days, look at the last 7 days, and that's going to be your best chance at predicting the next 7 days. And if you want to predict the next year, look at the last year. If you want to predict the next 5 years, look at the last 5 years. So if you want to predict the next 10 years of collector booster boxes, you're asking for some real speculation on what's going to happen. And yes, things could continue to pump. The universe's beyond path that Magic the Gathering has gone down, that seems to be bringing in lots of new people that are interested, that become interested in Magic the Gathering and then suddenly become interested retrospectively on older sets, that seems to pump the price and drain the market. I mean, drain supply, right? They're buying stuff, they're opening it, they're enjoying the game, which is great. And it is pushing prices up. This could go on. I think it will go on. But that's not guaranteed. There's nothing guaranteed about this. Anybody who says like, oh, I know for a fact that ABC Magic the Gathering investment is going to perform well. You don't. And I know one of the criticisms is like, oh, well, that's not very helpful. And it's like, no, this is one of the most helpful things you could get from this channel, is like risk aversion is built into humanity for a reason. And it's because so many things in life are so risky and so unknown. And at the top of that list, maybe not the top, but pretty far up there, right under what your Uncle Roger's going to do this weekend, is what's going to happen to the future Magic the Gathering. We just don't know. And it's important to like wrap our heads around it. So that's the number one reason. If you're thinking like, why don't big banks or whatever invest in Magic the Gathering? We don't know what's going to happen with Magic the Gathering. It is a wild west. I mean, month to month, year to year, things are so much different now than they were just a year ago. I mean, a year ago, there was like, well, I guess there was 2 Universes Beyond sets, 2 out of the 3 out of the 7. This year, it's mostly Universes Beyond. Back in 2024, we had what? Fallout? Was that? Oh, Assassin's Creed. Things are changing, and they could change the other direction. They could change all kinds of ways. And that's exciting. I think that's cool. But when people are like, you know, oh, I invalidate what you think you're gaining from your Magic investments because big banks aren't investing in Magic. It's like this is way too risky for anybody with serious big money to invest in unless you're very comfortable and very confident in this space, which is where I come in and where you come in. If, you know, people say invest in what you know, right? Like if you don't know anything about real estate, don't invest in real estate. If you don't know anything about stocks and bonds and whatever, maybe you should do some research and just get familiar with the basics of index funds and things like that. But maybe that's not the best place to invest your money if you don't know anything about it. And if you know a lot about Magic, I mean, this is a dangerous thing to say. Once again, this is an entertainment channel. Dude, I'm an influencer, unfortunately. Anybody on YouTube who is like, I'm not an influencer, just by nature, like we all influence each other. If you're putting yourself out there, you are influencing for good or for bad. And so there's peril in me talking about this, but it is what I personally believe. I believe that if you are well educated with how Magic the Gathering works, there is money to be made. Not just in buying and flipping collections, although there's a lot of money in that, not just in buying sealed stuff and flipping it, you know, in a few months and a few years, which I'm very confident and I've made great money doing that too. There's money to be made buying stuff and sitting on it for a decade. Like there is great money to be made. So for all the naysayers, for all the risk, for all the illiquidity and troubles with selling stuff, your investments or whatever, there is great opportunities to make great money if you're into it, you know, if you're down to clown. So that's it. That's it all. Thanks for watching. Please subscribe. That's the number one thing you can do. My name's Nick. This is Capital Catalyst. And thanks for watching.